Hey, what's up guys? John here. Yesterday we were told the Fed was going to cut interest rates 3 times in 2024.
Fed, as officials signal they are done raising rates, instead raising the number of rate cuts they see next year.
24 hours later, they came out and did a complete U-turn on that statement. And what they're saying now is that they are not talking about cutting interest rates. In fact, even talking about it in March is premature, according to the Financial Times. But when you look at what BlackRock is doing right now, when you look at what Blackstone is doing right now, those two entities combined have about $13 trillion in assets under management. And they're getting ready to walk in and start buying out the loans and all of the assets that these banks are holding nationwide. And they're sitting on a ton of vulnerability inside of the banking sector. And with these large entities, they have access to so much money. They already have so much control. They're going to walk in and they're going to get bigger and bigger and bigger. And so with this, people need to be prepared because we're walking into a very, very, very big change in America, a new normal. And I'm going to break this down for you. I'm going to show you exactly what they are doing. This isn't an opinion. This is what they are saying. The heads of BlackRock, the heads of Blackstone, what they are saying is coming and what they're getting ready for. So you can be ready. You can be positioned for this massive wealth transfer. Please hit the like button. Hit the like button. YouTube will share this content to educate more people about what's going on in America's economy. And if you'd like to fix your credit to position yourself for this massive wealth transfer, if you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to greatcreditfast.com. Click the link in the description just below this video. Schedule a free strategy session for Monday. Take a look at this. So banks are presently sitting on about $650 billion in losses. Now, when you look at this, it's pretty revealing. Consumers poured their excess savings into U.S. bank deposits, and the banks invested those deposits in low-yield government debt. By the end of 2021, U.S. banks held more than $4 trillion in government debt that yielded less than 2%. Then interest rates started to surge, with a 10-year at tripling to about 4.5% in less than 2 years. That sudden interest rate shock sent bond prices plunging, leading to a spate of bank failures and eventually to one of the biggest bank crashes in market history. That plunge in bond prices was bad news for U.S. banks with sizable fixed income portfolios. As the market values of these assets cratered, the bond crash culminated in an estimated $650 billion unrealized losses. So for Bank of America alone, they had $131.6 billion in unrealized losses sitting on its balance sheet at the end of the third quarter, which is more than half of the value of the company's $218 billion market cap. So you look at how big of a problem this really is. Now look at what BlackRock is doing. BlackRock sees huge opportunity in cast-off banking assets. So, BlackRock is poised to become a bigger buyer of assets that banks unload to improve their capital and liquidity after concluding that the industry faces years of upheaval brought on by high interest rates, stringent new regulations, and possible consolidation. Now, this isn't possible consolidation. Janet Yellen told us bank consolidation incoming. Jerome Powell told us bank consolidation incoming. We all know they're walking into a situation where a lot of these regional banks, a lot of these small credit unions are going to start to fold, and these bigger banks are going to get bigger and bigger and bigger. And so BlackRock and Blackstone are positioned for this. Gary Sheldon, a vice chairman of the world's biggest money manager, is leading efforts to position BlackRock funds as a source of capital for banks looking to sell asset-backed securities or of large portfolio of consumer, commercial, or residential loans. There's no shortage of supply. Lenders are offering assets every day to potential buyers like BlackRock, and the pace of big loan sales is ramping up. Mr. Sheldon said in an interview, the shifts are part of a long-term secular trend that will see private capital playing a larger role in support of lenders. It's a huge opportunity for BlackRock. It's a huge opportunity for our clients, said Mr. Sheldon, the firm's former chief financial officer and previously a financial institution banker for Morgan Stanley. As part of the plan, BlackRock could start new investment vehicles that target bank assets. BlackRock will join an increasingly crowded field. Private equity and credit managers have been angling to buy dislocated assets from banks, and some of the country's largest alternative asset managers tried to get into U.S. government process to auction off lenders after 4 of them collapsed earlier this year. Funds managed by BlackRock executives have long invested in asset-backed securities, and the company has advised financial institutions and regulators for years. The new effort reflects executives' assessments that there's more fallout coming from the industry's recent convulsions. While Mr. Sheldon said the mini crisis is now mostly over, banks must still contend with money market funds that are luring away depositors with higher yields and mismatches between duration of assets or lender books of liability to their clients. Some assets, including commercial real estate loans, are at risk. Now look at what Blackstone is doing. Blackstone, now this came out literally 10 days ago, 9 days ago. What BlackRock and Blackstone are doing, the fact that they're doing the same exact thing, it says everything, right? Blackstone president signals firm will do more bank asset deals. Blackstone is embracing its role a new role as a capital provider to Wall Street after sealing half dozen deals with banks involving about $7 billion worth of assets. President John Gray disclosed the number Wednesday at the Goldman Sachs U.S. Financial Services Conference and signaled the firm expects those kinds of deals to tighten bank balance sheets. We think that this area will continue to grow. In a typical deal with banks, an alternative asset manager takes a stake in a pool of loans that could include everything from home improvement to equipment loans. The transaction frees up banks' balance sheets even as they continue to service loans and maintain relationships with borrowers. Gray's statement underscores how money managers are major beneficiaries of shifting fortunes on Wall Street. The bank crisis in U.S. earlier this year has collapsed several regional players, opened the door for Blackstone, an alternative asset manager, to provide capital relief to banks more broadly. The fallout from the crisis further tilted the balance of power affecting private equity firms, got bigger in the business providing financial and owning loans in the past decade. No. When you look at what's happening here, it's so obvious. It is so clear. When you have Blackstone and BlackRock both getting ready, getting poised for this, when you have roughly $2 trillion in corporate debt, meaning corporate loans that businesses and organizations took out at much lower interest rates, they have to refinance into this new environment. You're going to start to see a lot of corporations selling off, warehouses, offices. The commercial real estate sector is in very, very, very big trouble. And a lot of commercial loans are held by companies, right? So we're walking into a domino effect that's going to be rippling through the U.S. economy in 2024. Now, they gave out a false sense of security yesterday, saying that we're going to start to see interest rate cuts coming in 2024. But when they're telling you that, it's premature, you have to realize they're probably not going to be cutting rates anytime soon. They're not going to be cutting rates anytime soon. Most people thought, in fact, they were going to start to cut rates in January of 2023. Everyone was talking about interest rate cuts coming January 2023. In about 2 weeks, that'll mark a one-year anniversary, and we're nowhere near cutting rates. In fact, what I think is going to happen is this massive consolidation of banking assets. We're going to start to see a lot of private equity firms, a lot of hedge funds, a lot of large entities getting bigger and bigger and bigger. In fact, I think one of the best businesses to be in 2024 is going to be being a money lender, because everybody's going to need money. Everybody. And with interest rates as high as they are, people are going to be able to charge, like hard money lending rates on assets with an extremely attractive loan to value, right? People are going to be desperate for the money, and banks aren't going to be lending like they were in 2020 and 2021. And so if you have access to money, you're going to be in a really strong position. If you're in a business that is going to flourish in a downturn, you're going to be in a very, very, very strong position. But you have to pay close attention to what the smartest people in the room are doing. Blackstone and BlackRock, people have opinions about them, but at the end of the day, money is power, money is control, and they have most of it, right? What do you think about this entire situation? Do you think we're walking into a scenario where this is going to happen? And U.S. commercial property owners to tap securities markets in 2024. They're literally telling you that, elevated interest rates, volatile in property values, and weakened cash flows have led to tightened lending standards, and banks and other commercial real estate lenders through 2023, right? They're going to be tapping security markets to try to get funding, right? They're going to be tapping other markets, other vehicles to get access to money, because banks aren't lending on commercial assets. Why would a bank that purchased, let's say, issued a loan on a property on a $10 million asset in 2021, now that asset's worth $6 million, and there's, $7 million in debt? What do you think these banks are going to do? Do you think they're going to issue a loan at $1 million more than the property's worth? No. that bank might say, we'll give you a loan of $3 million on this $6 million asset because the market's very volatile. We'll give you a loan of $3 million. Come to the table, write us a check for $4 million and we'll fund it. Or maybe Blackstone comes in saying, look, it's worth $6 million. We'll do this deal at $4 million. We'll do it at $4 million. You can only come to the table, just write us a check for $3 million because you owe $7 million, and we'll spread the difference. Or Blackstone will just strike a deal directly with the bank and take over that asset, and they'll be able to take over that deal at an extremely attractive rate. I mean, you're talking 50 cents on the dollar. That's what I think is going to happen. I think we're going to see these large funds step in and start acquiring all this commercial real estate. And then when you look at what's happening right now with the White House, they're issuing $35 billion to office to residential conversions. I mean, very, very low attractive interest rates to do this. And Blackstone, a lot of these companies, it wouldn't surprise me to see them step in, take over these assets for a very, very, very low discount to replacement value, then get cheap debt to issue some of these conversions, maybe get some massive tax deductions and tax write-offs. I mean, they're gonna win in a huge way. And the American capitalism, the American way of doing business, it's all changing. It started, this massive change started in 2008. It ramped up dramatically between 2020 and now. But between 2024 and 2025, things are gonna get crazy. Drop below. Let's have a conversation about this. If you'd like to fix your credit to position yourself for the greatest wealth transfer of all time, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, you want to square this stuff away because banks are going to tighten up dramatically. If your credit is not A1, you're not in a really strong position, it's going to be nearly impossible for you to get funding. And it's already going to be pretty hard to get funding. So you want to increase your odds dramatically. You want to put yourself in the strongest position possible to go out there and invest and make some big moves. So if you need help, we'd love to help you at GreatCreditFast.com. Catch you in the next video.